Good day, subscribers. Thank you so much for joining me today. I am Jeremy. This is the Financial Education Channel, and today we are talking about 4 stocks that are potential multi-baggers. 4 stocks that have the possibility, the keyword is possibility, of going up 100% or more within the next 12 to 18 months. I try to pick out 4 stocks that, in my opinion, they have a good chance of it, but at the same time, some of these stocks might also have a lot of potential to go on the downside, because anytime you got a stock that has a lot of upside potential, you also, on the other side, it has a lot of downside potential, generally speaking, with a lot of these stocks, guys. So all 4 of these are kind of like in different segments. One is more of like a turnaround possibility of a turnaround play. One is more of a hyper growth revenue company. One is more of a hyper growth company as far as profits go. And the other is just taking over an entire industry right now. So that's what we're looking at here today. And by the way, if you're wondering, I did not put GoPro and I did not put Wynn in this, even though I think they have the possibility of being in this category. I just didn't put them in because I talk about them so much already, and I talk about them on 3 stocks I'm buying pretty much every month. So there's no need to put them in another video. So in case you're wondering why I didn't put them in this video, that is the exact reason, guys. So let's go ahead and get into this, guys. I hope you enjoy. Hit that thumbs up button if you do. Let's see if we can get 200 likes on this video, and let's get into it. So number 1 stock, and by the way, I don't own personally any of these stocks except for my wife owns this first one, and it is Snapchat. Snapchat has a realistic possibility of going up more than 100% within the next 12 to 18 months. It also has potential of being a really dog stock as well. But the reason Snapchat has so much potential, and first off, with Snapchat, there's a lot of opinions on Snapchat. Some very positive, which are mostly from people that actually use Snapchat. Some that are very negative from a lot of people who have never even tried Snapchat, who don't really have any clue how Snapchat works. They don't have any clue how Snapchat gets its money, how the program even is done. They don't even have a Snapchat account. A lot of these people that have negative opinions on Snapchat. I've turned much more bullish on Snapchat as time has gone on because of some of the things I've seen, and since I've become an actual Snapchat user and I started my financial education Snapchat, like, I don't know, 4 weeks ago or whatever, I'm like blown away by the service. Like, I think it's just phenomenal. So the promise with Snapchat is this is a company that's in hyper growth revenue mode. I mean, look at 2015. They did $58 million in revenue. 2016, this past year, they did $404 million, guys. That is like ridiculous hyper growth. I mean, I consider a hyper growth revenue company as any company that's basically expanding revenues more than 50%. They expanded revenues hundreds of percent last year, guys. So huge growth there. Now, when I look at Snapchat, I see a possibility that they could actually kill some analyst numbers here in the next few quarters. Like, I look at the next quarter they're expecting here, this first one that Snapchat will be reported. The average estimate on revenue is only expected to be 157. When I look at Snapchat, I see the possibility that they could destroy that number. When I see how many ads are being played out there by big, huge corporations and things like that, I'm actually using Snapchat. I watch the stories and whatnot, and then an ad will play, and I'm like, dang, that movie's advertising on here, that advertiser's advertising on here already. A lot of potential there. So, and then you look at the June quarter, the analysts are only expecting $204 million. For the current year, they're only expecting $1 billion. And I know that's still ridiculous growth, going from 400 million to $1 billion. That's actually well over 100% growth. But when I look at that number, I'm like, I think Snapchat can crush that. And then I look at the next year number, they're expecting only $2 billion, which would be a little less than 100%. That's phenomenal growth. Don't get me wrong. But when I just look at Snapchat, comparing it to some social media platforms of the past that were actually more developed as far as their ad platforms went, at this time, and Snapchat's just kind of getting online with all that, I'm like, I see a potential that Snapchat could absolutely destroy analyst numbers quarter after quarter after quarter for the year. And when you destroy analyst numbers over and over again, you get upgrades and upgrades and upgrades like crazy, and that pushes your stock to ridiculous heights. So that's kind of what I'm looking for in Snapchat, that they could just maybe kill some of these numbers. A few other things I'm just looking at with Snapchat that I really like. Facebook is doing everything they can to take features from Snapchat. They're copying Snapchat left and right now, between camera effects, Facebook Direct, Facebook Stories. All these things are rip-offs of basically Snapchat. The way I look at that is whenever you're the incumbent, whenever you're the company coming in and you got the big dog trying to copy you left and right, you know you're doing something right, and you know you got the big dog worried about whatever you're doing. When they're trying to copy every feature you have, copy everything you're doing, you're the innovator. You're the innovator, and they're the ones that are not cool because they're copying. Whenever somebody tries to copy, they're not cool. I mean, when you think about some of the successful Apple products, for instance, over time, right? Apple always had like the cool effect because they were the first ones to really get out there and sell those products, market them properly, come out with a good product that people loved, had positive reviews, and then another electronic company would try to copy them, and those other ones never succeeded because they were seen as not the cool ones. So they had to go a different route and try to focus around their business and things like that. It's really hard, no matter what, to copy another company and be successful, especially when that company you're trying to copy is the cool company. They're the cool company on the block. They're the ones that are building in those kinds of things. So very difficult thing for Facebook to try to just I mean, it's very ignorant for people to think Facebook's just going to copy these features of Snapchat and then Snapchat's irrelevant. No, you don't really understand the way business works and those kinds of things. Okay, so Snapchat today announced that they're revamping the way users search for stories. The daily photos and videos that people and brands post to their accounts, as well as opening up a new advertising revenue stream. Currently, Snapchat's search function is only for finding accounts. Users can either select their friends they converse with the most or search by account name for new people to follow. But its new search will allow users to get a bit more esoteric. They can run search for accounts to follow or stories to watch based upon topics ranging from tacos to New York Fashion Week. The tweak is good news for both users and advertisers, at least in theory. Users get a new way to find information that's relevant to them, whether it's happening at their local bar or sporting event around the country, and advertisers could get a new place to display content. While Snapchat isn't putting ads in the search results just yet, it's easy to imagine the company getting into sponsored stories similar to the sponsored links in Google, which includes its search term items. It's another huge new revenue stream that Snapchat's opening up, and we've seen with someone like a Facebook, them just open up a new revenue stream, It's very easy actually when you're focused so many years around just building the base, right? And then the base is built and then it just keeps on building itself and building itself. Then you get to start thinking about, okay, now how do we monetize? Okay, let's do this. And it's a win-win for consumers with something like this, but it's also a big win for advertisers. This could be the new holy grail of Snapchat advertising. So, and then also, one other thing I want to point out with the whole story is, unlike stories found in the Snapchat Discover, which are compiled by human editors, the new search results are automatically curated. Searches will be carried out by a machine learning system that looks at text in snaps, as well as when the snaps are posted to discern if they're relevant to what a user is searching for. Very interesting stuff there. I mean, this is like, say I want to know what's going on at the local college basketball game, community college. I could like search that term item, and then anybody that's like posted videos from there, right? Because most Snapchat users have it where the location that they're at is posted, right? And Snapchat knows the location. I could search that, and then I could see any snaps that somebody posted at the local community college game that I wanted to see or whatnot. I can see that information. Also, it will discern from text. This is really cool technology algorithm type stuff Snapchat's doing. And Snapchat, the more I've used the service, the more I've realized how special the technology is they have at that company. It's not easy stuff to replicate. They're doing some very, very innovative things. I mean, if it was easy to replicate, Facebook would have done it a year ago, 2 years ago, some of this stuff, guys. They're way out there as far as their technology. Whatever software engineers they have working at that company, whatever brain power they have, it's really freaking good. It's really good. I'm so impressed by it. So now another thing, these guys are freaking so smart with marketing. This is from my local hometown of Phoenix, Arizona. By the way, I live in Vegas, so it's not where I live anymore, but I came across this story. Talk about clever marketing. Just as tens of thousands of fans discern on downtown Phoenix for the Final Four festivities, Snapchat placed at least 2 of its bright yellow vending machines across the city for people to buy its newest products, spectacle sunglasses that shoot video clips. They're basically $129 sunglasses that you can do videos from. Anyone that can buy them at spectacles.com, but it's the hunting down these machines. Basically what Snapchat did is they posted a couple pictures on like I think Instagram and in Twitter, right? That said the machines were somewhere in Phoenix and people had to go hunt them down. And like when you're the cool guy in town, you can do stuff like that, and it just makes you that much cooler that people like are willing to hunt for these sunglasses and hunt for the machines and things like that. And I'm like, that's a freaking brilliant marketing scheme because it gets people all excited and like, let's go out and find with their friends and whatnot. And we know Snapchat users for the most part are mostly people under 25 who would realistically do something like that and actually go look for these machines and whatnot. I'm blown away by the talent over there at Snapchat. Those are some young ass people running that company, but whenever they try to tell you young people can't run a company, look at that company, look at Facebook. That's another company that's run by a lot of young dogs that's just tearing stuff up. But I'm amazed at the brain power as far as the tech goes and as far as the marketing goes for Snapchat. Very impressed with that company. So definitely a company that has potential to go up over 100% over the next 12 to 18 months. Will it do it? No, who knows? Might even drop 50%. It just depends on a lot of different factors. Can they keep beating analyst numbers? Are the growth metrics good? All those kinds of things, guys. So that covers Snapchat, the first one. Number 2 is Fitbit. Fitbit is a possible turnaround play. So what Fitbit has going for it and why Fitbit could rise maybe 100% over the next 12 to 18 months, and also Fitbit could drop a considerable amount and go out of business possibly if they don't do some things right. But Fitbit is a company right now. Listen to this. They have a market cap of $1.3 billion. $1.3 billion market cap. That's it. This is a company that has $300 million in cash, $400 million in short-term investments, and no debt. So you're basically, if you take the cash and investments, right, $700 million, you subtract that from the market cap, which is $1.3 billion, you're paying $600 million for a company. $600 million you're paying for the entire Fitbit company, basically. A company that last year did $2.1 billion in revenue. Now, the reason Fitbit has dropped so substantially, fallen off a cliff, is because they went from being a very profitable company and making a profit of $175 million in 2015 to now they lost over $100 million. So that is the main reason Snapchat stock has just fallen off a cliff, is because they went from being a really profit machine and it looked like the profits were just going to keep expanding. Now all of a sudden they're losing money, and that is a very bad sign. That's the issue with Snapchat, but at the same time, you're paying $600 million essentially for the company because they have $300 million in cash, $400 million in investments, and it's only a $1.3 billion market cap, guys. Now, what I'm also looking at was Fitbit. This is a company that expectations are insanely low. You look at these analyst numbers here. Analysts are expecting 44% negative revenue. 44% negative revenue in this quarter. They're expecting another 40% negative next quarter. And for the current year in general, they're expecting numbers to be down 27%. So basically, there's an expectation with Fitbit that they're going to struggle, like horribly struggle. So this is a situation with Fitbit that maybe they can outperform because maybe expectations have come in so low for Fitbit. The expectations are so low, the way that analysts have cut numbers, that maybe Fitbit can beat those numbers a bit and kind of get a whole positive vibe going back with the company. The question is, can they actually do that? I don't know. That's a big question. I'm not personally invested in Fitbit, but if they can, this could be a stock that will go up massively, really fast. Now, here's what happened. 2 months ago, Fitbit announced they're cutting 6% of the workforce they had. They had about 110 jobs they were cutting. Fitbit's in a situation now where if they went ahead and, let's say, cut another 20% of work staff, as long as they keep their products and services going in new products roadmap, I think that would be an extremely healthy move for them as a company and them as a stock. When you go from a company that's profitable to now all of a sudden you're losing massive amounts of money, which Fitbit could possibly lose $200 to $300 million this year, depending on how things go. You got to cut that employee force as long as it won't hurt the business. If they can realistically cut 20% of that workforce, they'll save them massive amounts of money that will get them on a path to probably profitability in 2018 at that point. And that's the type of thing that could move the stock up dramatically. So that's what we're looking at with Fitbit. Can they beat numbers over the next few quarters and get a positive vibe going? Should they cut workforce, which in my opinion they absolutely should, as long as it does not affect the product roadmap negatively. They should absolutely cut a massive amount of the workforce, get those job cuts done, get back to profitability at this point. And then you're looking at a stock that all of a sudden maybe could be profitable in 2018, has stabilized revenues. Very important they stabilize revenues in the second half of this year. The first at least 2 quarters, if not 3 quarters, will be absolutely horrible. Regardless, even if they do beat those analyst numbers, they're still horrible. But can maybe Q4, they maybe stabilize quite a bit, maybe only a down 5% or 10% number. And then maybe Q1 of next year, maybe they start to get back to slight growth or break even at that point. Maybe they're a little profitable now. Then you're talking about a company that has some things going for it. But as of right now, it's a tough one. If they can do those type of things, guys, this stock could easily rise 100% in the next 12 to 18 months. Number 3 stock, Facebook. Facebook is the one that is in a great position right now, and they're in a position that they are a hyper growth company in the net income area. They are so profitable, it is insane. We're going to look at some numbers here. So Facebook right now, the way I'm looking at Facebook, it's trading at a forward PE of 21. This is a hyper growth company, especially as far as net income goes. And they're 21 forward PE, that's extremely low. That's extremely low. When I look at Facebook, this is a company that grew revenues by almost $10 billion last year. Almost $10 billion revenue growth. And then the best part of that is the majority of that money went to net income. Almost $7 billion of that new $10 billion in revenue went to that net income line. Facebook is a company here that is experiencing hyper ridiculous growth in that net income. The amount of profits they have going for them is getting insane. It's a company that's now all of a sudden last year made $10 billion in profit. Very possible this year they could do somewhere around a $15 to maybe even $20 billion profit number if they, keep the expenses in line, if they keep expanding the way they have been expanding. Very realistic for them to do a $15 billion, $20 billion type number, guys, as far as net income. That money goes straight toward cash that they can either buy other companies, make other investments out there and things like that. Hyper growth company that's at a forward PE of 21, extremely low. This stock is very undervalued in my opinion. Then you look at their past history here, right? First off, the revenue estimates are great for the next few quarters. 45% revenue growth expected in this current quarter we're in. 40% for next quarter. The current year is expected around a 37% revenue growth. And next year, even it's going to slow down a bit, but still they're expecting around a 26% revenue growth number. Very big. And then we look at the earnings, right? Earnings history here. Last year's last quarter, right? They beat analyst numbers by 24%. The next quarter they beat them by 18%. The next quarter they beat them by 12%. The next quarter they beat them by 7%. Every single quarter, Facebook is beating numbers and beating numbers and beating numbers over and over again, guys. So I look at this company and I'm very impressed with the way they're able to beat numbers, with the way they're able to make that revenue go straight toward that net income line. And this is a reason this stock could rise easily 100% over the next 12 to 18 months, even though it's run such a far way already. The only negative and the one thing that could keep Facebook stock down is Instagram. The reason Instagram could is Instagram has been its growth engine as far as the amount of users coming onto the platform and thing. Facebook has been slowing for quite a while now, many years. Facebook has slowed to, very small growth at all, right? Facebook. But Instagram has been just a growth beast for the last few years. The problem is Instagram growth is slowing substantially now with users, and you will really get to see these numbers slow down as the course of this year goes on. Trust me on that. You'll get to see Instagram numbers slow considerably over the course of the year. Will analysts look at that and will investors look at that as, oh my gosh, Facebook growth might be done? Will advertisers start pulling back some advertising spend because they're like, this isn't as much growth as we thought, the ad rates are going up too much, things like that? Who knows? That's the one thing that could possibly hold back the stock, in my opinion. But at the same time, they have so much money on their balance sheet and they have so many profits coming in, they might just be able to acquire the next great company or something like that, the next Instagram, even though that's harder said than done, actually, guys. So that's why Facebook could go up 100% over the next 12 to 18 months. Will it? Who knows? And last stock, number 4. Tesla. This company has been an absolute animal over time. I mean, just today, they must have known I was doing this video. The stock went up almost 7% today alone. And it's hilarious. I saw Elon Musk on Twitter today. He posted a tweet that said, stormy weather in Shortville, basically just talking shit to all the short sellers and whatnot. That's going to be like the one thing every CEO out there would love to do, but they just don't have the balls to do it. This is why a founder-led company is great, because they don't give a shit. They can say whatever they want and talk shit like that. It's hilarious. I've never seen a CEO talk crap to short sellers and whatnot. So anyways, just before I even get into the financials, I just want to say, like, I've been noticing more and more Teslas on the road, like, especially in my area. Now, I live in an upper middle class area, and I'm surrounded by 3 communities that are like multi-million-dollar communities. So I got, if you ever want a car show, just set up a lawn chair out front where I live, and you can watch Lamborghinis and Ferraris go by all day and stuff. But I've been seeing more and more Teslas, the Tesla X, the Tesla, S sedans and whatnot. And a lot of these cars are very expensive, and a lot of the people that own those vehicles, right, they could afford any car they want. They could drive any car they want. And they pick to drive a Tesla. They pick to drive a Tesla. I think that is very powerful. And I know that's not going to show up in any metric or something like that, right? And there's something no one really pays attention to. But when I look at that just from a business standpoint, people that could afford any car they want, any car, they could have drove a Ferrari that day. They could have drove a Lamborghini that day. They could have drove a Range Rover that day. But instead, they decided to drive a Tesla. Instead, they decided to buy a Tesla. That speaks volumes to what Tesla might be able to do coming up here. Because if rich people are picking a Tesla over another car, what do you think a regular person is going to do when they have a Tesla option versus a Ford option, a GM option? Give me a break. If somebody's picking a Tesla over a Ferrari, you don't think they're going to pick a Tesla over a Ford Focus? Or a Nissan Maxima? Come on. So that's something huge just to pay attention to, and I see it in my area so much. I'm seeing more and more Teslas every single day out here. It's absolutely incredible, guys. So Tesla shares hit an all-time high on Monday after the electric car maker announced strong first quarter delivery numbers Sunday that outpaced analysts' expectations. Tesla's shares surged to $294, blowing past a previous high of $291 and pushing Tesla's market cap past Ford. To put it in perspective, Tesla sold just over 76,000 cars in 2016, where Ford sold 6.7 million cars. That's absolutely incredible that Tesla has a market cap now bigger than Ford, despite selling 76,000 cars last year and Ford doing 6.7 million. But this is just not more proof that Wall Street does not care about the past. They only care about the future. They only care about years out and things like that, especially with a company that has a story like Tesla has. So the electric car maker said on Sunday that it delivered 25,000 vehicles to customers in Q1 2017. Of that, 13,450 models were Model S, which is a sedan, and 11,550 were the Model X Sport Utility number. That's a quarterly high of 25,000 vehicles. So Tesla, they're hitting numbers really good. That's 69% growth, I believe, year over year, 69% increase over Q1 2016. So the amount of cars they're producing is just going up and up and should just keep going up and up as the gigafactories built out, right? But the numbers they're doing now are going to be pathetic compared to the numbers they're going to do in 2018, 2019, and especially 2020, because what they have coming is why the stock is over Ford right now. Tesla has the Model 3 coming out here. The Model 3 is supposed to start production late this summer, around July, August. Deliveries are supposed to start happening in the fall. Tesla Model 3 is supposed to be the car that's under $40,000 that most Americans can actually afford. And this is the growth engine for Tesla. This is a car that's going to take Tesla to whole other levels. And the reason Tesla stock could possibly rise 100% over the next 12 to 18 months is because of the Model 3. I mean, it's great what they have with the Model S. It's great what they have with the Model X, sedan, sport utility vehicle. It's great what they have going with the solar and the Gigafactory. All these things are great. They're building out some things that other companies aren't even close to building out and might never be able to build out. But the Model 3 car is the thing that's going to push Tesla to new highs and to records and maybe bring them profitability. I'm not expecting profitability anytime soon, but profitability is not important for Tesla at this moment in time. All people care about right now as far as investors go in Tesla is, are they going to take over that car industry? Are they going to have an Apple type market share in the car industry. You know, Apple has like a 50% market share of smartphones right now in America, right? Will Tesla have a 50% market share of cars sold 10 years from now? I believe they will, absolutely. The question is, will it happen? Those kinds of things. If they do, you can see where the profits will start coming. And then Tesla has the ability to then, they're going to probably be able to offer upgrades to these cars where they might come out with a new technology. You know, maybe you can get your roof replaced and now that roof's a super solar thing. You don't even have to plug in your car. You can just leave it out in your driveway or whatever and it'll charge itself. Things like that might be coming over the coming years where people might go in and spend $5,000, $10,000, take out a loan or whatever to get a new roof, batteries, a lot of new features that the Teslas could have. And then you have the whole Solar City acquisition, which is basically going to transform solar energy for roofing, those kinds of things, guys. Oh my gosh, there's so much going for them. And this is a company that's not going to be profitable anytime soon, but no one cares about that. All that matters right now is that they keep increasing these units. They keep trying to slice into that market share pie of automobiles. Then they start expanding worldwide, and then it becomes a worldwide growth story and a lot of things going for Tesla. So it definitely has a possibility of rising 100% over the next 12 to 18 months, let's say, but it also has a possibility of being cut in half. You know, the stock could drop 50% if something happens with production with the Model 3, negativity around it and things like that. You know, it definitely has some possibilities, and maybe all of a sudden everybody's starting to pay attention to profitability and no one cares about, you know, what revenue numbers are. You never know what could happen with a company like this, but as of right now, it's just a growth beast, guys. So those are the 4 growth stocks that have a chance of going up 100% over the next 12 to 18 months. Do you guys own any of these? I would love to know if you own any of these stocks out there, if you're planning on owning any of these new stocks. Snapchat we talked about, which is a hyper growth revenue company. We talked about Fitbit, which is a possible turnaround play. We talked about Facebook, which is a hyper-growth net income company, and we talked about Tesla, which is just going to probably take over an industry over the next decade, guys. So I hope you enjoyed this today. Let me know what you guys think. If you have not subscribed, you may want to. We talk personal finance. We talk entrepreneurship. I'm an actual business owner. We talk business a lot on this channel. We talk the stock market, the most of everything. Thank you for watching, guys, and have a great day.